If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. Welcome back everyone, it's Louis Crypto here, back with another Bitcoin update. In yesterday's update, we're talking about these CME gaps, how we could be following this Wyckoff schematic and this being the 35k high. We're also going to analyze how there are further targets to the upside and that we could still dump off after that. So I'm going to analyze all of this today. Don't forget to like, subscribe, comment, share, and we'll dive straight up into this video. So we do actually have targets higher and they are still valid, guys, but usually this is the CME gap chart, and usually when we fill in a gap we tend to reverse. It's not every single time this is the case, but one good example is that we had a big gap over here, we came back up, filled it in, we also had the moving averages as our resistance, and then we eventually dumped lower. And what we were waiting for down here was a bullish signal to flash to send us back up. I gave this trade totally free here on the channel. This is where you could have profited very nicely from this entry down here with the bullish divergence that appeared above this support. So at a key level, we saw bullish divergence sending us back up to 30k. That's where we took some profits. Let me just get rid of that position. That's where we took some profits out of our trade. And then if we eventually got back above this, we're invalidating the bearish scenario where we flip bullish, and then looking at that CME gap as well as these Fibonacci's as our targets. We spoke in yesterday's update how out of this original fib through Feb and March of this year, we've met 5 of the 6 targets. We're missing out on that 36k area. And then with this new fib over here measuring from 31.8k, oh yeah, 31, okay, on the CME chart's a bit different, it's 32k down to this 25k low. We can see that we've got our first 3 targets over here, and the final 3 targets up here are between 41 and 46k. So technically speaking, while we are above the golden pocket, which is 29k, 29.5k, those are still technically valid. You'd have to go ahead and lose this key level of support where all the moving averages are now sitting to invalidate those targets. However, what we're now waiting for is to see if this CME gap, where this resistance is at 34 to 35k, will actually hold. And as we can see a lot of targets in this area, what I will do is draw a massive box of resistance between 34.4 and 37.6k. And as long as we're maintaining below this point, what I'm looking in this area for is some divergences, maybe on the 4 hour or the 1 hour. There will be divergences on the lower time frame. For example, let's go to the 15-minute right now, and what we can see is a high, higher high. Is this higher? Let me just check the prices. Close 3484, 3482. So yeah, this is a slight higher high than that, and we're just looking for these divergences over here. So we can see that in fact this is higher on the indicator, we got lower highs, and this is a higher high. So essentially signaling a disagreement at a point at a key level, and that's why we started to dump down. As long as we maintain below this, we're going to continue lower, and we can see that it took us back underneath the 55 where we actually saw some higher lows, and then we continued higher. So getting back above the moving average is a bullish factor. All we now need to do for further bullish continuation is to break that high. We've seen the divergence actually play out over here, so that was a tradable opportunity. I think I'm actually seeing a further bearish divergence, which is the higher highs here but the lower highs over here. So this would have been another short signal for you guys to profit on, just to show you how you would do it. You'd enter, put the stop loss above the high over here, and you can see that what we really need to go for is where this is saying 3. So we could have even had a smaller trade over here, and this would have essentially meant that if you're risking 5%, you would have got a gain of 15%. Although it's not saying it down here, we're using the leverage to make this 5%, and in turn, because we're getting 3 times that over here, the red box fits into the green 3 times, we're going to not just get 5%, we're going to get 15% in return out of these trades. So these are all tradable opportunities for you guys to do at this key level of resistance, and at these key levels we're looking for these divergences to trade. But what we're now waiting for, again, if we scale back to the daily time frame, is a push through this area to get up to here. I know we saw some divergences on the 15-minute, but if I were to see it on the 1 hour or the 4 hour time frame, which at the moment I'm not really too sure we've got any at the moment. In fact, yeah, there was one over here. We went slightly higher and we saw the lower highs, and we did actually come down on the chart, but just to those key levels of support. So the divergence, this would have been the trade right from here, stop loss above this point, and then looking for a 3 to 1. So yeah, it's pretty much that same exact trade. And then we came back to those key levels of support, which is the 20 moving average, while we are still above the 20, we're looking for bullish continuation. So guys, if we are truly bullish, if we're going to break through this massive area to head up to 40 to 46k, we need to see a break of this high. As we are holding the 20 moving average, this means it's technically bullish, so we must see a break like this right now, flipping support to continue higher. As we are above the 20, this is meaning that the immediate short-term trend is up, but we can obviously deviate from this and see dumps from this point. We are currently right now at this golden pocket over here on the 1 hour time frame. So then I could be looking for a bearish divergence in this area. I don't think we saw any, to be honest. What I'm looking for here is disagreements with the indicator. So no, we haven't actually got any bearish divergences at the moment, I don't believe. No, we don't have. So we haven't got a signal right now suggesting that this is topping out. So when we're looking at the Fibonacci's, we know that the golden pocket area is a point of rejection. So we're at that point of rejection right now. If we were to start dumping from this daily resistance between 34 and 37k, then it's from here, because we're using this golden pocket out of this entire range over here. This is where we would be looking for those topping out signals. As we've got the moving averages slightly above us here, it could just suggest dumping down and reclaiming it. So the moment we're breaking through this level, we've got candle closes over here. So what I would suggest is if we start to see closes above $34,845, then we're creating the reversal wave and we're going on an upward trajectory towards these new sets of targets between 35 and 38k over here, which would take us towards those higher fib levels over here. You can see it's acting nicely as confluence with the 1618 out of that original fib. I was out of this fib over here, measuring from, I think it was the July top to the September bottom. Yeah, the July top to the September bottoms, 1618 is at 37k. And if we scale down again, we have some confluence at the new fib levels that we're using between 37 and 38k. So in fact, I could technically make this purple box a little bit bigger, but just for now I'm just going to keep it like this. So we know that if we're breaking past $34,845 and we're confirming that as support, we've got upward targets up ahead, and it would still be within this purple box, which again guys is resistance. So if we break into it, which we're waiting to do with this breakout, if it were to break out, we're preparing for the reverse wave. So we just need to see a break of that 786 fib for what I'm about to say is to happen. So you then this would then become support, and then we look to head to the range high, and we have multiple targets over there. So as long as we maintain this now as support, we continue up to those targets. But understand, at the moment we're not pushing through yet, so that what I've just said is not valid as of now. We can see that we're on the outside and we're underneath this huge purple box, this 3 to 4k purple box. And so while we are still here, if there are topping out signals and we go ahead and lose the 20 moving average on the 1 hour time frame, this is where we can start to see that dump. So it's whether this Wyckoff schematic is this top over here is 35k, or we actually do continue a little bit higher. But again guys, scaling back to the daily time frame, it's this whole area that we need to push through to get this continuation. So we're at literally like a 3 to 4k level of resistance right now. And as long as we're holding below this point, there is still risk for dumps. I want to know your thoughts in the comment section below. Don't forget to like, subscribe, and share this video if you can. If you didn't watch yesterday's video, please go ahead and do so. We spoke about this Wyckoff schematic where we could be going down to 20k, or to between 20 and 23k. So I still believe that this is on the cards while we are still holding beneath this low, beneath this high, my apologies. Because we're still following the schematic with the high, higher high, and higher high, and we've got the low and a higher low over here, which is pretty much showing the high, higher high, higher high, low, and a higher low. And this is the deviation over here by breaking out of the resistance, falling back to it, looking for it to be support, where we have this dead cat bounce, another dead cat bounce, then we fall back all the way to the low over here, which would be 25k, and on the loss of 25k we'd be heading towards maybe 23k here and potentially 20k over here. That is if it's following this Wyckoff distribution. This is what I'm going to be keeping in the back of my mind while we are still beneath this high over here, but this of course can also be changed and invalidated. Again guys, we need to see dumps from this area, and if we're not dumping and we're pushing through, then I would believe that this is not happening. It's just something to keep in the back of your minds, and that's why I suggest watching yesterday's update, because when we're looking at this area, I gave a bullish trade from down here because we had a bullish divergence up to 30k. But let's say it never actually came and we did lose 25k. We would then look for the next layer of support. So as this was once resistance and then support, you just look for the support below, and that's the 20k CME gap over here. So it just mean we'd be coming down to there. But what's happened is we spotted that bullish divergence, which is higher than this low. So this was our entry for a buy trade where we took profits at 29 to 30k over here. And then on the break of that, you could be looking for further bullish signals to send you up to even just here if you want to take a trade, or to the 35k CME gap. So what could be happening, what we were suggesting in the last video, as we didn't fill this gap, could we now be filling this gap and then eventually coming down and filling this gap to then eventually continue higher in the end? I want to know your thoughts in the comment section below. So yeah, what do you think is going to happen? Will we just push through and continue to these targets? At that point, we would dump, guys, understand that, but the CME gap would become support. So you'd find support over here. Then the question becomes, do we continue higher, or do we dead cat bounce again, flip into resistance, and then go on a nasty path downwards? What I believe is that we do need to see a crash before April. So that's marked out for you. It's the 1st of April that is marked out. This is not the specific date of the halving. I don't think that's out yet. I'm not sure. Please correct me in the comment section if you know the exact date of the halving. I just know that it's in April. And so when we're looking at this from the beginning of the year back here in January, we've pretty much only been in uptrend structure. So we haven't seen a downtrend. So we need to see this changing at some point. I just believe that we need to see a crash before April. If we look into the past halvings, we do tend to see a crash before that. So we haven't now a 6-month period where this could still be the case. So I'm going to be very vigilant, and that path that I shown you with the Wyckoff schematic is probably what would actually take us down before April next year. But again, we could push through this, flip it into support, and continue to this 40 to 46k target. But for now, while this is still resistance, I'm looking for these bearish signals from this 3 to 4k area to have a dump, maybe just back down to about the 30k range, and then we'll see if we can break through or a dead cat bounce and continue lower. All eyes are on Bitcoin, guys. Thank you so much for tuning in, and I'll catch you in the next one. Cheers. If any of you are interested in learning how to trade just like me, there's multiple options. Click this ebook. It covers all the strategies that I use in these YouTube updates, so you will have all the same skills. Covers the Japanese candlestick, chart patterns, support and resistance, why I use EMAs over trend lines, Fibonacci's, divergences, and again, using these all together to profit using them. I've also got a discount on my course at the moment, which ends at the end of this month. So that's down to £100. You also gain free access to my Discord community for the next 3 months, where you can expect to be a part of 12 to 24 group mentorship calls. If you want something that's a bit more personalized to your needs, then join my one-to-one mentorship plan. You can choose 5 or 10 hours of my one-to-one help, and included will be the 3 months free in the community, as well as my 6-hour long video course.